Welcome to Market Movers. I'm Jim Urio, and we are discussing the aftermath of the November 6th election. We're looking at using E-mini S&P weekly options to hedge potential risks or create exposure to potentially different policy paths. Joining me is Chief Investment Officer of Kingsview Asset Management, Scott Martin.
Hi, Jim.
Okay, what's the biggest takeaway? What are the implications of this? I know it's a broad question.
It's a broad question, and it's early, my friend. The biggest takeaway is that, oh my gosh, it looks like we're all going to get along and actually get some policies passed. Maybe have things carry through like additional tax cuts. So that's what I believe the hope is, let's say, is in the market so far in the ES.
Wait, so tell me this. We have gridlock, possibly now, but we have somewhat of it was a referendum on supply-side economics. That referendum kind of passed a little bit because Republicans didn't do that poorly. Which one is the market reacting positively to?
It's probably both, to be honest, and that's my typical answer on good questions like that you fire off to me that I'm not 100% sure because, Jim, the historical reference points that are said about gridlock apply to other elections and other political situations and scenarios. This is anything but a typical one. That's all I'm saying.
I think you're right about that. I think you're right. I think it's different.
Thank you.
Now, before we dive into our trade discussion, I'd like to point out, with all market movers, it's important to view these as examples that allow you to see different ways to use futures and options products to either manage risk or create additional trade opportunities, not as recommendation or advice. Prices and movements will vary. When we price these now, the DEES E-mini contract was trading $27.97. Scott.
$27.97.
Yeah,
my gosh.
right.
I mean, yesterday during Election Day, we had some lows, 60 handles plus lower, a little bit more. My gosh, Jim, the market loves this. So why don't I?
Okay.
Because, Jim, I just feel like we do have a long portfolio as far as the way I have my trades set up, and I do want to maybe find some hedging opportunities. Not to pour out the party punch here, but I do believe that if you look back at the markets and look at how things have traded in the past, it might be worth putting on some protection. Therefore, today, Jim, I'm buying the week 3 November 27.50, 27.25 put spread for 4 ticks. So it'll cost you about $200 to put on to make a potential 10.50. Expires November 16th. ES underlying 27.97. You mentioned why that level, by the way, real quick. That was about that breakout level where we saw things really start to trend higher in the ES. I believe we could trade back down and test that level. And if we go through it, you're going to see that put spread give you the nice protection you want.
I can't argue with anyone counter trading a huge rally like this, particularly when it comes to something like this where you're hedging positions that you already have. I like this trade. I'm the other way, and volatility's come down from 20 to 17, so I'm looking to buy volatility as well. So I'm looking at buying the week 3, the same expiration as yours, the November 28, 25, 28.50 call spread for 7 ticks. It risks $350 to make a potential 900. Expires November 16th, 27.97 underlying. Now keep in mind, your trade is 50 ticks away, and it's half the price. My tick is 25. My price is 25 ticks away, and it's 7 ticks instead of 4.
Sure.
Thoughts?
So, well, you give up a little risk reward there, or a little reward rather. But I like the expression. I want to be on board, my friend, and I do like the fact you do get some nice bump too if it does fill out. The only thing I just worry about is, okay, as you said, volatility's come in. So to me, when volatility comes in like that drastically, I usually lean maybe more to the put side because we saw in past rallies and then fade outs that the volatility spikes and then those put spreads tend to price up.
Makes sense. Does the Fed care about what happened yesterday? Does it change anything that they're thinking about?
I don't believe it changes anything yet, but we got to watch the data because the data is starting to heat up a little bit.
Interesting. Thanks for joining us on Market Movers. I'm Jim Urio, where we're helping to make you a better trader.